Hello and welcome to the XFO Intelligence Podcast channel. This is the Market Pulse series. Today is June 19th, 2026. Before we dive in, don't forget to like, share, and subscribe to our channel. Email us at xfointelligence@gmail.com with feedback, or if you'd like to request more information about our new Thought Leadership on Demand service. Now, let's talk about something monumental: the Great Rewiring, how physical reality is forcing a paradigm shift in global markets. As we close the second quarter of 2026, global financial markets are projecting an illusion of seamless optimism. Equities are rallying on the back of a historic geopolitical breakthrough, and the technology sector is in an AI-driven supercycle, pushing valuations through the roof. But beneath this perfect soft landing, a profound structural mutation is happening. The financial system is detaching from physical reality, and this friction is quietly rewiring how global flows. We're not in the standard cyclical market anymore. We are witnessing a topological shift in the architecture of global investing. Let's break down what's driving this transition and what it means for the next phase of the market. First, the macro paradox: physics versus policy. We're seeing a stark divergence between the physical economy and monetary policy. On the physical front, the U.S Iran memorandum and the reopening of the Strait of Hormuz have driven Brent crude prices below $80 per barrel, drastically lowering global transport, manufacturing, and energy costs. We're looking at a real physical disinflation. But meanwhile, at the Federal Reserve, the newly minted chair Chair Warsh is pushing a hawkish agenda, with signals of rate hikes and almost no forward guidance. The insight here: the Fed is fighting a financial construct, inflation expectations, while physics, in the form of cheap energy, is already solving it. Historically, when central bank policy clashes with physical realities, like sub-$80 oil, physics wins. Second, let's look at the AI illusion and the second-order reality. The tech sector's AI narrative is supercharging certain stocks. Memory companies like SanDisk and Micron are soaring. SpaceX's post-IPO frenzy even briefly outpaced Amazon's market cap. And China's Kuaishou? It's seeing its Kling AI video generation unit valued at $18 billion, effectively giving a negative value to its core business lines. Here's the insight: capital moves like a fluid. As the main AI plays get too crowded, smart money is pivoting. The true bottlenecks of AI aren't software or memory. It's the physical infrastructure: power supply, cooling, and grid capacity. The next big run will be in the physical AI enablers, not the chips. Third, and crucially, the death of the long end and the rise of the shadows. With Warsh pushing opacity at the Fed, the long-term treasury market can no longer reliably price risk. Bond funds are in chaos, and institutional money is shifting permanently into private credit, direct lending, and floating-rate debt. Private credit is emerging as the new institutional safe haven: fluid, adaptable, and anchored in real-time information, rather than central bank signals. Fourth, the localization premium in a fragmented world. Even with the Strait of Hormuz open, geopolitics are volatile. Regulatory crackdowns, spying scandals, and cross-border seizures are redefining risk. Complex multinational supply chains are liabilities, not assets. The market is starting to value geographic insulation. Mid-cap, domestic-focused industrials are commanding premiums, while far-flung conglomerates are trading at a discount. So what's the 90-day outlook? By late Q3, we're in for what we call the Great Pruning. First, a correction hitting crowded AI memory trades. Expect a 15% to 20% drop. 2. A rally in the physical economy sectors: airlines, industrial cooling, power generation. 3. A private credit boom, compressing yields but cementing its new safe haven status. 4. The reckoning at Kuaishou. If AI monetization stalls, a structural derating is in the cards. In conclusion, the market isn't just volatile, it's mutating. The old paradigms: passive long-duration bonds, hyper-globalized players, and crowded financialized tech, are becoming obsolete. The future belongs to the builders of power grids, private credit providers, and the architects of localized supply chains. When finance detaches from physics, physics wins every time. The Great Rewiring has already begun. Thank you for joining today. Make sure to like, share, and subscribe. And if you have feedback or want more info on our Thought Leadership on Demand service, email us at xfointelligence@gmail.com. We'll see you next time. Disclaimer: this content is for informational purposes only and does not constitute financial or investment advice. Always consult a financial professional before making decisions.